Crypto Kids, we have brand new breaking news from President Trump, and I know that's the case almost on a daily basis, but this one in particular is having a very macro impact on markets. Right after this piece of breaking news, the dollar tanked by an approximate 1% of value to the downside, after already falling by 10% since President Trump came into office. Gold has broken to $5,200 per ounce. Silver reclaimed $114. The S&P hit a very small new all-time high. Why is this? What could have President Trump said? Well, you're going to find out on today's update video. We're going to break down why the dollar is losing value and why that's actually good for us. So stay tuned until the end. And when I say us, I mean as Bitcoin investors. Tonight is the FOMC. At the very end part of this video, I will give you my predictions for what will happen during the Federal Open Market Committee conference, and we will be live streaming it at the Moon Show channel, as we always do. With that said, Crypto Kids, if this is your first video as a crypto kid, make sure to subscribe. We're almost at 65,000 subscribers. We give you daily content, daily breakdowns of the markets, where if you just watch one video that we post every single day, you will learn everything that happened, which was important in the past 24 hours, and you will also get insights into what could potentially come next. So subscribe and make sure to destroy the like button if you haven't done so already. It means the world to me. It's the only thing that I ask for in return for this content. So please, pretty please, destroy the likes. Okay, I trust that you've done that. Let's cover the breaking news from President Trump. It's an 11-second clip, very important for context. I'm going to play it. Make sure your ears are open, and we will do a breakdown of it right after. Here it goes.
Well, Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollars.
So the dollar has fallen, for context, by about 10% since President Trump took office for the second time. The reporter is asking, do you think the dollar has declined too much? President Trump knows how much the dollar is valued at. I would hope so. So he says, as an answer to that comment, no, the dollar is doing fine. The dollar is doing great. Right after that reply by President Trump, the dollar falls by another almost 1% in value. The truth is, the dollar is doing great. The dollar is doing fantastic. The dollar is doing exactly what President Trump wants it to be doing. He wants it to be going down. He wants it to be breaking this macro support line that's been holding since 2010. He wants the dollar to become less valuable. Why? Why does he want the dollar to be less valuable? And what does it mean for markets? Well, America needs to refinance $9.5 trillion worth of capital this year. Currently, America is sitting at $38.6 trillion of national debts. $38.6 trillion. Just like how you need to pay an installment on your car every single month, just like how you need to pay your mortgage every single year, America needs to pay an installment yearly on its debts. And this year, they need to refinance $9.5 trillion worth of capital. $9.5 trillion through issuance of treasury bonds. $9.5 trillion is a lot of money. Scooping up $9.5 trillion from foreign investors, from local investors, is a big sum. Think of it like raising equity for your company. Raising $10 million is a very difficult task. Even if you're America, though, raising $9.5 trillion is an infinitely more difficult task. So they need to lower the value of the US dollar to make this $9.5 trillion investment more lucrative for foreign investors. Treasuries are priced in US dollars. And if other countries' currencies are going up against the US dollar, treasuries are technically becoming cheaper to buy. American treasuries are considered to be the safest investments. That's what they're considered to be. There's a very nice coupon. America does well as a country, so people scoop it up. People buy up treasuries when there's an opportunity. And as the US dollar comes down, other countries may find these treasuries as a more lucrative opportunity to purchase. And they need to, by the way, make people purchase $9.5 trillion, because if they don't, America goes bankrupt. So they need to make the dollar cheaper. And how do they do that? Well, they can lower interest rates, for example, and show a potential politicization of the Fed. They're doing a very good job with it. Currently, the person that is expected to replace the current Fed chair, looks like to be Rick Ryder. an individual that has said last year over on Eric Balkunas's ETF IQ on Bloomberg, he mentioned the US economy is not that rate sensitive except for one thing, which is housing. And we have a housing problem. My view being you got to get that mortgage rate down and you'll actually reduce inflation. So he clearly considers the risks to inflation not high. He wants the housing market to be bolstered again. And to do that, you need to bring mortgage rates down. Mortgage rates follow the federal funds rate. So he's literally telling us that if he becomes Fed chair, he's going to want to bring rates to lower levels. That would be great. That would allow for banks to sell US dollars at a much more cheaper cost. If you can do that, then you're going to refinance your debts. And the potential politicization shows the contrast between this new potential Fed chair and the current existing Fed chair. The current existing Fed chair, who will speak tonight, wants the rates to be remaining where they are. We can look at the dot plot and you will see he wants the rates to be as is for even in 2028 and beyond. That is the expectation. He wants the rates to be as is. So the contrast between the two Fed chairs, one is siding more with Trump's agenda, one is siding with a more independent agenda, hints at politicization of the Federal Reserve. That also reduces confidence in the dollar and brings it down. And then finally, you can show political instability, both internally and externally. Holding the dollars means that you're long on America doing well. If America seems a little bit shaky, then investors are going to want to sell. If they sell, the dollar value goes down. What are these forms of political instability? Well, you can have internal ones, like President Trump saying the Democrats will probably impeach him if he wins the midterms. If the president gets impeached, that is a shake. That's a shake to the economy. That is a shake to stability. So that's one example. And then you have a bunch of different external examples, like President Trump saying Cuba will be failing pretty soon. President Trump, well, not President Trump, but the United States deploying another fleet of warships towards Iran. US saying it's ready to use force to ensure that Venezuela cooperates with its demand. America wanting to acquire Greenland, the imperialist approach. These all show external instability, which again reduces the value of the dollar. So now we've understood why the dollar is falling down. But is this even good? Is this a good thing? Well, it is good for asset holders. If you have precious metals, if you have the S&P 500, if you have Bitcoin, which I think is going to see a catch-up, if you have all of these assets, in the long term, I'm thinking of the next 1, 2, 3, 4 years. I'm not thinking just short term. In the short term, you can always have corrections, whatnot. But I'm thinking long term. If you have assets, you're going to be a winner. You're going to be a winner. Why? Because as the dollar drops in value, people flock to investments to hedge themselves against inflation. The dollar losing value means inflation. It means monetary debasement. So you need to put your money somewhere so that your purchasing power doesn't go. And that goes into equities, that goes into Bitcoin, that goes into precious metals. So if you're an asset holder, you win. And also, if you're an American company manufacturing in America, then you also win. You see, another reason for why Trump wants the dollar to go down, apart from refinancing their debt, obviously, is so that he can shift production back into the United States. He wants for companies to produce in America. I just need to find that chart. There you go. This looks at the US Industrial Production Index. Up to about the point of where globalization started in the late 90s, America was a producing country. They were producing cars, technology. And then globalization happened. China came and said, hey, you know what? We can produce the same technology, the same amount of goods for a fraction of the cost. So all American companies, they went to other countries to produce their assets there, their goods there, and then bring them back to America to sell it to the public. Americans have a lot of money. They can go ahead and purchase things, they can consume. But if America doesn't manufacture internally, then they become subject to other countries and their desires, their agendas. You don't become independent. So Trump wants to create production in America, which when we think in the long term, once companies produce locally, they can sell goods for cheaper prices, for cheaper costs. And currently about 30 to 40% of all electronics, durable goods are made externally. A lot of non-durable goods like clothing and food are also made about 10 to 20% externally away from the US. So if companies invest and they produce locally, then the cost of living, which is a big issue, also becomes a less of an issue because things get a reduction in their value. So long term, this is great. Companies investing to make factories in America is great, but in the short term is where the suffrage happens. People flock their assets, flock their money into equities and precious metals, not crypto in the short term. Due to it being seen as too risky, they put it into equities, which they feel is less risky. They put it into precious metals, but like I said, I think crypto will follow eventually, and they do it to protect their capital against inflation. We can see that equities experienced one of the largest increases of capital flow ever since, I would say, the inception of the S&P 500 and modern trading vehicles. They experienced 1.6 trillion of net inflows since 2020. People are investing. As the dollar loses value, as they print more money, they put it into equities to hedge themselves. That's the story. That is the main story. All right? That's the main story that I wanted to portray to you here on this video. So if you're a long-term thinker and you understand that the money will continuously lose its value, and your long assets can be Bitcoin, can be gold, can be silver, can be equities with a long-term mindset, in my opinion, you're going to win. So that concludes our video today. Just very quickly, with regards to FOMC, it's taking place in 12 hours time. I think that the rates are going to remain stagnant. There's a 97.2% chance they don't cut rates. And I don't think the markets will be moving in a particular direction necessarily following the federal funds rate announcement unless they do end up cutting rates, which I think is very improbable. If they cut rates for some reason, I think markets can move to the upside, but most likely they won't. A majority of the volatility will take place during the press conference when Fed Chair Powell is actually speaking, and he will give us insight into the long-term outlook of the Fed, if they're dovish or if they're hawkish. That's impossible to predict. Fed Chair Powell has become recently a bit unpredictable, but I can bet money that he's going to say the words uncertainty and good afternoon. That's pretty much what we know, and we will live stream it later on tonight over on the Moon Show channel, and I will make another breakdown post FOMC here on this channel, bite-sized content. Thank you for watching. Take care, and as always, guys, I'll see you on the next video. Bye-bye.